Hello everyone. There is a zone in price action that no one really talks about, and I have not seen anyone notice it, but it's really significant and you can catch sniper entries and big moves using it. It can be found on any time frame, any asset. It's the hidden order block. It's one of the secrets that I was able to discover as I studied fair value gaps more and more. I always had that question that no one could answer, which is which fair value gap to enter. Some people would say extreme fair value gap, and some people would say the nearest one, as we might have a breakaway gap that should not be filled. However, what you will learn in this video is something you never thought about in this way. So I'll start with a quick introduction and then go to TradingView to show you real examples straight from the market. So the first question that I'm going to be asking is which one is the order block, right? So we have two pieces of price action. Now I want you to answer. Most likely your answer is this one. That's the leg that has an order block. This one is an order block. Now I'll show you, in case you don't know what an order block is, in the next slide, just a brief introduction about it. Now your answer, if you answer this one, you're correct. We have an order block right here that we could use. However, what about this one? Do you see any order block? Most likely you don't see any, right? Because the order block, in case we have, or if we had actually another bearish candle here, I would say, yeah, we have an order block. And some people would also call this as an order block, but it's not really that accurate, right? Sometime, yeah, it could be, but sometime not. But there is an order block here, or actually more than one, that you could use to get those sniper entries that you can actually use, that the real order block that you have might not actually be filled on the first or second or maybe third move. So maybe 3 touches that you get huge moves, and then after that the real order block might, or the one that is here, might get tested. So you miss a lot of moves, and I'll show you which order block right here is the hidden one and the one that you should use. Now going briefly over what is an order block in case you don't know, but I know that especially if you follow me for a while, you of course know what an order block is. Now what is an order block? It's the change in state of delivery, right? Change in state delivery, or the change in the direction. In other words, is the last bullish move before the bearish move, or it's the last bearish move before the bullish move. So if you see here, what we have is a big bullish move, right? So we have an expansion move. But if we think about it, where do we have our last bearish move? So of course we have a lot of bearish candle here until we get to the last one that we had the change of state delivery, right? So we switch at this point, at this exact point, from being bearish to being bullish, and we got that change of state delivery, which is, in simple words, an engulfing candle. So when we have this, it confirms this as an order block, right? And the same thing here, we have this as an order block. You could go with the bodies or you could go with the wicks. Okay, that's a choice. And there are some situations that sometimes you need to go with the body, sometimes you need to go with the the whole candle. So this is what an order block is. But in this video, what I'm teaching you is not this type of order block. I'm teaching you one that is hidden within the price action you have, and you notice that a lot of the time, and without realization, without knowing that, you'll see that price doesn't retrace back to your fair value gap, doesn't retrace back to your order block, but it only goes to that zone. So that's the hidden order block. Starting with this, what we have here is a real order block, right? And we started going up, started going up, started going up. Now, in order to find that hidden order block, what I need to see is what? I really prefer to see 2 consecutive fair value gaps, because this really confirms that we have a real, hidden order block. Or we could have what? 2 big candles, or maybe 3 big candles. So 3 big candles, and I want them to be around the same size, or even the 2 fair value gaps, I want them to be around the same size. Now, what is the hidden order block? We have 1 fair value gap here, another one here. Now, what do you notice is started pushing up. And at this point in price action, we created a fair value gap, or at least on this second candle, when we close above, we actually create a fair value gap. What you notice here is we actually, we wicked above, close here, and then the next candle, we had a wick below the closing price of this candle, right? A wick, and then we started going up, breaking above the last bullish candle, or the wick of the bullish candle. What that looks on the same time frame, if you understand how candlesticks work, or it's going to be more obvious in the lower time frame because we have more details the lower we go in price action or the lower we go in time frames. What's going to happen here is actually price going up, which is this one, price going up. That's the first bullish candle. What happened is we had the high of that bullish candle, we went lower, and then the opening of this candle, we also went lower, and then we went back to the range right here, and then we closed above and we started going higher than the wick of this candle. What does this look to you? The move from here to here, what is that? That's an order block. Or if you use, supply and demand, that's also a demand area. Why? Because we have the rally, base, and then rally. So that's the base, that's the one that you could use as a demand area, right? Now this could be also the opposite for supply area. So supply, demand, as well as order blocks, kind of the same, right? Order block is more to look for more criteria and more confluences. But what is this move from here to here? 1, 2. That's an hidden order block. That's your hidden order block from here to here. And you notice a lot that sometime price will come lower, doesn't go to the fair value gap, and you'll go crazy and price just gonna react from here and go higher, and you'll say, okay, why is the fair value gap left open? It's not about breakaway gaps. It's because we have a hidden order block here, or at least sometime it's gonna be a hidden demand zone. Okay, in my opinion, and that's only my opinion, but I think it's really valid. Every order block is either supply and demand, but not every supply and demand area is an order block. So you could look at it this way, right? So every order block is a supply and demand, but not every supply and demand is an order block. You should look at it this way. Why? Because order block is literally a supply and demand, but with more confluences and more filters to look for, right? And more, we gotta have a liquidity sweep, we gotta have the breakout structure, all of those stuff. Supply and demand, it's more about patterns, memorizing patterns. Let's stop with this now. We're gonna go over the chart, show you everything in the market. Now remember, we're gonna go over euro dollar, and I'm gonna go maybe over gold. We're gonna go over different time frames and show you how we can go from higher time frame to lower time frame, and how this actually work on any pair, any time frame. But in my opinion, it works the most, or at least I could see it working the best on euro dollar, maybe because I understand it more and that's my favorite pair. But it really works on any pair, and that's what I'm gonna show you. Maybe after euro dollar and gold, I'm gonna go over really a random pair and show you that it still works there. So starting with the euro dollar, and what we see here is, this is the current price action. We're gonna start from here, going lower, but we're gonna focus on our hidden order blocks, right? Now, hidden order blocks, it's not gonna be just marking any zone. It gotta be with the higher time frame and knowing that, okay, we're reacting off a level, going to another level. So you should already have that context and framework, right? So it's not gonna be any area and taking an entry from any area. No, you gotta have one that is, for example, part of a market maker's motor reacting with another higher time frame PD array. Now, what we see here is that we had liquidity sweep here, started going higher. We had multiple fair value gaps here, actually 2 consecutive fair value gaps. Now, anyone looking to enter from this level, what's gonna happen here is actually price doesn't go there. Now we have another fair value gap here where price respect. But you see this wick below? There was a reason for this wick. Now it's not gonna be perfect all the time, but this is what happens. So we got a balanced price range, right? And this is already a change in state delivery. We got the change in state delivery here. Also this order block, anyone looking for this on fill of the order block, they're not gonna get it. Now why this happened? Because in reality, what we had here is this major hidden order block. So if you think about it here, what happened is price going higher till this point, and then it retraced to this point and then started going higher. What do you see here? What is this kind of pattern showing you? Now if I just put it like this, what is this? That's literally a demand area right here. So, or an order block, you call it an order block, or also a mitigation block, right? So this is mitigation block, maybe an order block here, but the whole move on the lower time frame is an order block. That's why we're expecting price to come lower to this level. What do you see happening here? Actually, price kind of wicked below, trapped a lot of people here, but if you know this type of entry, you'll know that price is coming to this hidden order block. So in a bullish scenario, what we're gonna do is mark the top wick to the bottom wick and then drag it to the right. And you see, that's exactly where price reacted off, started going higher. Now it happened, sometimes you get some, you know, if they're not on the same size or kind of, for example, you see, this is a really huge fair value gap and we have one higher here. And we're already sweeping, for example, previous week high and we started to come lower. That's not an area that I would trust, right? Especially that we have two different fair value gaps of a size, as well as we're already sweeping a previous weekly high. And you see one area right here. Another one we can look for is what? We can see that there's a lot of move to the upside here, but there are no fair value gaps. So we don't actually count on those. What happened here is, for example, we can see that we got, yeah, right here, one fair value gap, another one. What do we have here? And I'm going to go to lower time frame to show you what happened on the lower time frame. I think that's going to be a good one. But what happened here is price pushing higher, coming lower, and then going higher. Now there is definitely a potential of price coming here, but there is another confluence that we could count on in order to know that, okay, this is a good level, which is the overlapping of a high. So we got an overlapping of a high. Let me put it on another color. For example, let's do red and then a little bit bigger. You see, we got an overlapping. That's exactly where price reacted off here, as well as the hidden order block. Now, hidden order block in the lower time frame, I'll show you how it looks, and you're gonna see that it's really an order block and nothing else. So that's the lower time frame. That's a 5 minutes. Actually, we have a lot of news here. So all of those candles have a lot of, you know, big wicks. But what do you see here is what? We actually started going higher, coming lower, and then going higher. What does that look to you, right? What is this zone? That's an order block. And we see we had a sweep, we had a breaker structure. This is your refined order block. This is your, you know, the whole order block right here. So if you want to go with the refined order block, it's going to be somewhere in here. It's your refined one. But the whole order block is this one. And that's the same wick, the top wick to the lower wick that we marked. This is your hidden order block. On that time frame, you could even see it, right? And now let's see that where price actually reacted off very nicely. You see, reacted off the overlapping, started going higher after that, and that's a big move. Now with the confirmation of lower time frame, actually can bank a lot of money using this. Now I'm going for some, you know, clear looking areas. For example, I could see this. So we got one fair value gap, another fair value gap. What is the area of that last bearish move before the bullish move? It's actually from here to here. But in this case, price went lower, respected that one. And I think we had some high impact news here going higher. So anyway, you should not have traded this one. Now the same thing happening here. What do you see? We can see that we're actually sweeping this liquidity level very nicely. And then we started pushing higher, creating what? First fair value gap, second fair value gap. Where did price react off? Yes, it's the first fair value gap. But if you want to have a more better entry, because now price came here first, second time we got to change the delivery on the low time frame. Definitely you get stopped out, another time stopped out, and then, you know, you keep losing until you give up. But if you know that we have a hidden order block that price could actually retrace back to, which is from here to here, that's the sniper entry you get, right? So you see the difference between this entry and the entry of a regular fair value gap. Now, sometimes this could work also when we have big fair value gap and then continuation lower. I wanted to have a better fair value gap here, but you see this move also from here to here, that's by itself is a hidden order block. It's not the highest probability, but you see it could still work going lower. Now I could see the same thing happening where we can see that we had fair value gap here, price coming lower, creating one fair value gap, second fair value gap. Where do we have our hidden order block? Right here. And we get a very nice reaction of it. Now, it's not going to be the best entries all the time, because sometimes price has a reason to go to the fair value gap, sometimes not. So you see, very nice, respected that level, started going lower. But you see the same thing happening here. So in this case, we had what? One fair value gap, and then second fair value gap here, and third fair value gap. When we have three fair value gaps, we have more than one hidden order block. So the main order block is going to be here, but we have one hidden order block from this level, right? And when we have bigger wicks, it's like, more safer to you because you have a little bit of a bigger zone. Now, let's see this one. You see, we got a small wick to the lower side, bigger wick to the upside. I could still mark this one. And you see, kind of not the best reaction of it. But then if I drag this to the right, the other one, which is the extreme hidden order block, what do you see happening? Exactly a sniper entry of that level. If you go to low time frame, you could have, definitely catch this one. Now, if you go to low time frame to show you this move, how it looks, let's see. Now, this is how it looks on the 15 minutes. What is this? We literally marked that one on the 4 hour, and take a look how it looks on the 15 minutes. Literally the best order block you could mark. Maybe some adjustment here, right? If you want to, make it like this, that's the one. But you always cover the high of the, the highest candle, even if it's not the last bullish candle. But that's a perfect order block, and that's where actually price came to and maybe give me. So here, no, price did not reach. Here we get a reaction, changes the delivery, also a 3 candle pattern, right? We got a 3 candle pattern around here. That's a confirmation of it. Maybe on a higher time frame, like 1 hour, it's going to be more obvious. We started going lower. We got a fair value gap here. We got a fair value gap. We started pushing lower, and that's a perfect entry you could have gotten. Now remember that price is going to go from the hidden order block. Maybe first of all, it's going to go to the first fair value gap. So if we have a price action that looks like this, right? And we have major order block or the main order block, and then we have a hidden order block, and we have a fair value gap. What will happen is price, first of all, come into the fair value gap, give you a reaction, then going higher to the hidden order block, give you another reaction, and then price come into the order block, give you a reaction, and then after that, when we have more exhaustion in the market, it's going to take the high of that order block. That's the cycle of the market if you are in the right direction, right? That's what's going to happen. You see what happened here? Also the same. We got this hidden order block, and what happened is price actually coming back to it, started going lower. A lot of, a huge move of that level, started going higher, maybe to the extreme order block, coming lower, and then taking the high. That's a cycle of the market. Now, taking a look at the 1 minute time frame, right? And always when looking at the 1 minute time frame, you want to align it with some 15-minute, order blocks, fair value gap, any 15-minute structure in order to validate the move, because we cannot just look at any 1 minute time frame. We want to have it aligned with a 15-minute time frame, because now we have a lot of price action that sometimes is not necessary, right? And it's going to cause a lot of revenge trading, a lot of just taking random entries. But when you have it aligned with the 15-minute, it's going to give you those explosive moves, and you're going to only be involved with high quality price action. Now let's take a look at what is happening on the 1 minute time frame, right? And we're not going to go just over anything. We're going to go over price action that is respected after 15-minute structure. So if we go and take a look at 15-minute structure, what we have is we got a sweep of the Asian session right here. So what happened is we got a sweep of the Asian session here, the Asian session high on the London, and we have this order block that price came back to and almost swept the high here. So there was almost a sweep of liquidity, and we pushed lower. Now on the 1 minute, we can see a lot of details on what happened here. But take a look at this. After price sweeping this liquidity level, what happened is what? And this is what we always look for, is what? 2 consecutive fair value gaps, because the 2 consecutive fair value gaps confirm to us the displacement, or at least that there is a big move that an order block could be part of it. Now what happened here is that a lot of people looking for what? This order block to be respected, or this order block for price to come back to it. Now price doesn't come there. Now a lot of people are also looking for this fair value gap to be filled. Now a lot of people having a limit order here, and then stop loss above. Price doesn't come back there, and you see what's the reason why price not filling that fair value gap, and then price started going lower. What's the reason? The reason is a hidden order block in the lower time frame. Now, if you cannot go down to a lower time frame, you now understand that you have an order block. How? So what happened here is what? Price actually going lower, pushing a little bit higher, and then going lower. There is not a big wick here, right? If there was one, it's going to be better, but it's all good. Now, where do we have our hidden order block? That's going to prevent price from going to the real order block and sometimes from the fair value gap. From here to here, it's exactly where price goes to, and then started pushing lower. That's how we actually get those snapper entries. Now we started going lower, and a lot of the time, for example, here we could have gotten another entry. So you see we started going lower, maybe a 5 minute fair value gap here. We push lower. What do we have here? 5 minute fair, I mean 1 minute fair value gap and a 1 minute fair value gap. Price did not go to this one, and it didn't go to the order block. Maybe after some time, yes, but not as of here. Why? Because we have a hidden order block. Now let me show you how you could have gotten that sniper entry, maybe only using the 1 minute time frame, of course aligned with the 15 minute. So you can see that we have this bearish move, the wick, right, and then the bullish move, and then we started the bearish move. So that's our last bullish move. We take it to the right, and you see exactly price, you know, reacting at that level, going lower. That's a huge one. Now let's see, after some time it's gonna lose the strength, but you see even here when we have no significant wicks, that's still the level where price actually respect, right? Now let's forget about this one and go to this. So on the New York, price started going higher into an order block in the 15 minute, right? And rejection block, sweeping liquidity, started going lower. What happened here? Now we created an order block, one fair value gap, second fair value gap. A lot of people would say, okay, which one or which fair value gap to enter off? We got two fair value gaps. Some people will say, I'll go with the extreme one because I get better reward to risk. The reality of it is what? Price, yeah, it can go to the extreme order block, but what we have here is a hidden order block just on the 1 minute time frame by itself. If we zoom in, what we can see is what? Right here, we can see that we have this move to this move. What is this? That's our hidden order block from this move to this move. So if I go and mark it, why? Because we have this bearish move, and then from this point we started going up, and then we went up to this point, and then we break below this level. So that's our, some people call it the base, right? So this is the level that we're going to be marking from here to here. Drag it to the right. See what happened actually here. Exactly there again, literally to that level, started going lower. And what happened after? We got a fair value gap, and a lot of people will say, okay, let's enter this fair value gap, and actually price goes to that level. But then if you want more refined, I mean, sometimes people would enter from this and they'll get a lot of drawdown on the low time frame and maybe, you know, lose on that trade. But let's take a look at this, our hidden order block, literally price respecting that level to the tick, maybe a small drawdown here, and then we started going lower. We could have looked at it this way. Again, we have a small fair value gap, another fair value gap, two consecutive fair value gaps. Where do we take it off from, right? We got this body. We don't have a move from here. It's okay. I prefer wicks, but sometimes price will close here and then immediately shoots up and then go lower. So that's still a valid area, which you see price literally respecting that one. Not a lot of, you know, momentum or reversal at that point, but then we started going higher because now it's not a part of a 15-minute level, right? So this is just by looking at 1 minute time frame, we can still see that this level is actually respected very nicely. And you see a lot of the time, even when we have no wicks, still this level, maybe from here to here, it really respected very nicely. Okay, now we're gonna go maybe to different pair, see how it goes on gold or any other pair, and yeah, we're gonna go from there. But I really hope that you have a good understanding of this and you can actually identify it in the best way. Maybe look for any type of entry from that level, from a higher time frame to a lower time frame in a valid time frame alignment. Yeah, I think that's gonna be a very nice one. So I think we covered a lot of example already in the euro dollar, but I'm gonna go over some more examples in gold. But I want to show you the sequence of the price action, how it moves again from the first fair value gap, then to the hidden order block, then maybe to the extreme fair value gap, and then to the order block until it takes the liquidity, right? That's the sequence of the price action. Actually, we can see one fair value gap, second, huge ones. This candle doesn't have a wick to the upside, but still this could be, we have a very small area, right? Small zone, but that's where we actually price respected. So you see hidden order block here. I mean, if you go to 15-minute, it's not going to be that significant. But if you go to something like maybe 1 minute or 5 minutes, let's see the 5 minutes. Do you see anything here? So if you go back, yeah, I mean, it's kind of a significant one. So you see we started going lower, going up, coming lower. It's not really, maybe 15 minutes is going to be more clear. Actually, it's, yeah, it's this one. So we started going lower, going up, coming lower. So it's part of this candle right here, and it's also part of a rejection block. So when we have no wick to the upside, it's going to be a little bit more tricky for us to see it on the lower time frame, but you can see that it's a hidden order block on the lower time frame. Now you see the sequence here is what we see. We got one fair value gap, not another fair value gap, but that's a candle that closed above. It can still be a lower probability hidden order block. But now, why is this one not the highest probability? Because we got another overlapping of this, as well as an overlapping of the body. That's where actually price is coming back now, right? So you see price is coming back. Now the same thing happening where those are not the highest probability ones, a little bit less probability. One fair value gap and then closing above. So you could say two big candles, right? Not two fair value gaps, but two big candles. This is a move of what? This is still a hidden order block, and price exactly came back to the next candle, started going higher. And now you see we closed below, we went to the extreme order block. So this is the sequence. I see that actually gold respect the overlapping a lot, right? I really respect the overlapping more than any other pair that I see. You see, sometimes we can get more than one fair value gaps, which leads to what? More than one hidden order block, right? So for example, we can see here that we have one hidden order block here. Actually, I think price only tested it once. So you see one hidden order block. We tested it here. We go up. Okay, I think this is not a valid one. Now we go back here. I think there was another one here. So yeah, this is one of the examples. We get a fair value gap here, another one here, another one here. So three fair value gaps, which leads to more than one hidden order block. One of those is this one. That's one hidden order block. And you see price came back to it here, actually, and another time here. So two times comes back to that hidden order block. Now on another time, and that's again the sequence. So price goes back first to the nearest hidden order block, then to the next one. You see, next one is what? We got a fair value gap and another fair value gap, which leads to what? A hidden order block here. Very nice respect of that level, going higher. The same thing happening here. We got one fair value gap, second fair value gap. A hidden order block is gonna be around this level, and you see, very nice respect, huge move on the 4 hour. And you see, we still did not close below this level at all. So no closure below, and then we started going higher. And this keep happening over and over. So now you could look at this price action leg, right, on a higher time frame, and you might see less than those number of fair value gaps, and you could identify the right hidden order block. But what you see here is what? One fair value gap, second fair value gap. That's a hidden order block, right? That's one. We could have another one here, and those levels, they might have a small reaction on the lower time frame. But this is how we use the hidden order blocks, and you know, it's really significant when you know how to use it. It's really good when you know what lower time frame entry to look for. So yeah, I mean, this is all about it. Any time frame, any pair, it works in all those different assets. Just make sure you follow the right time frame alignment and the right type of entry. That's it for the video. I hope that I covered enough examples to understand the hidden order block, and I hope that I actually taught you something new that you can use to pursue your financial freedom. If you appreciate my content, then make sure to hit the like button, subscribe to the channel, and share this video with your friends. This is Mulham, and I'll see you in the next video.